So good morning guys, it's Friday the 6th of April and this is the DAX Trader morning briefing. We're going to take a look at the usual and try and see if we can find out opportunities to use the tools which we teach in the premium channel. So we'll get kicked off straight away with the gap from yesterday, and the one thing that I noticed when you take a look at this is that the gaps that you find can often act as balance points. And John, I think it was you that might well have spotted this one yesterday in the channel. But depending on which way you want to look at this, you could use the top or the bottom of the gap. And what I'm going to do is I'm just going to choose this particular area. Let's just go with this one. This low of the 3 that you can see here. And I'm going to pull just a basic tool through the gap. So the 50% line here. So you could probably use a Fibonacci tool, which is pretty similar. Just take out the 38.2 and the 61.8, and you're just left with a 50 line in the middle. So that's your balance point potentially, and price could therefore continue to move up towards the target of that line. So you see how this plays out. Now, no, not every gap is going to be a balance point, but it's something that you can kind of add to your armory. And when you see price tag the spot almost to the pip, makes it very, very interesting. Certainly if you get a reaction, which you kind of do, you get a little double top forming here, and it starts to move away. The next thing you might or might not spot is this kind of interesting little M pattern here. Now, I don't know how many of you are harmonic traders. I'm not really, but it's just an interesting observation. So as an exercise to you, go and have a look and see what type of pattern that is and what the numbers suggest, because it's all based on Fibonacci. So those Fibonacci fans might enjoy these patterns. But that would suggest that there's an opportunity to buy it if that was a valid pattern. So it could have provided some sort of very, very basic signal to traders that wanted to do that. Next thing you might want to do is start looking at these peaks and troughs and start thinking about them as pivots if they're confirmed. So for example, you might have that one there. I don't know which one you would start from. Perhaps it would have been down here. But you could maybe say that's one here, what's one there, that's one there. It's not forming any particular trend at this stage. In fact, it's kind of starting to coil a little bit. And then perhaps you're starting to form a high up here. So as a speculative way, assuming that this wide range bar is the start of a changing behaviour, you can start to anticipate maybe where price would want to move to. So you could put a fork on there. Just a basic Andrews pitchfork. It should be available on most charting platforms. And it would give you this idea of a median line target potential. Now, Andrews, who worked on the median line method, created this pitchfork, came up with 5 rules, and one of the rules is that when price has a median line, it often will reach that as a high probability of meeting the median line, and doesn't always get there, but it has a high probability. And certainly when you get a reaction to an upper median line parallel like this, it gives it a little bit more weight that it's likely to start heading down towards that. If after a certain amount of time it doesn't reach it, then perhaps you can start to apply a different rule and say, well, actually it's just not going to get there. So reversal is more likely to happen. So you just kind of watch it. It gets pretty close down here. Comes back up to test that upper median line parallel once more. Has another dive to the downside. And what you really want to be seeing here is this trend stay intact. So what you're expecting for buyers, or sorry, sellers to do is to continue this move. They should be taking that previous low out, because if they fail to do that, then you could argue there's again a change of behaviour about to happen there. So still kind of pushing on that upper median line parallel. What I mean by push is that each time it tests it, you can pretty much stomp on it and sell it and just push it back down again. So there's 3 different opportunities to effectively do a type 1 trade, which is a sell. Here you've got that dive lower, so it started to form a new low, confirms that as a previous high. And then you continue to start watching it. Price still hasn't reached the median line, so I don't know how long you would want to leave it. But as it starts to break through the upper median line parallel and take out that previous high, you've pretty much got a change in behavior right there. So you might have to start to concede that, well, actually, that's the end of that. And, you know, we've failed to reach the median line and we've taken out a previous high. The trend is now broken and we're out of the fork. So, you know, that idea perhaps now can be taken away. So you start to think of a new idea and you think, okay, well, I've got some major pivots here. I'm just going to tidy up these blue lines. Got some major pivots here relative to the board that I'm looking at anyway, which is a 250 tick chart. And you think to yourself, okay, well, there's a low there. And I'll take a fork up to my B point, which is a high up there. And maybe assume that that's now going to be C. Just make that visible. And I've got a new fork. You might be a little bit late to the party there, but we'll see how it develops. Just short the median line, tags the median line. There you go. Second attempt. So Andrew says that normally when you reach a median line, you'll get some sort of reaction. Price will either reverse from it or it will go through it, as in gap through it, or a wide range bar through it. So let's see what kind of reaction we get here. So we had both. We had a bit of a bounce, started to coil underneath, and you build up this bit of pressure. You get this kind of pressure cooker situation where, I've said this analogy in the channel before, but it's like, imagine a spring. You know, if you've got this kind of spring that you press down on, if you press that spring down, you're going to be getting this kind of potential energy building up where it just wants to release into kinetic energy and move, and it's going to bounce off, shoot in one direction or another. Yeah, once you press that down, off it goes. It's pretty much the same as the market. When you start to compress price action into a small coil like that, it's going to shoot off. Did the same here. It's doing the same there. And you can pretty much look at any kind of clump of price action and you'll see that it happens. There's perhaps a little example of it there as well. So you've got that energy build up. So it shoots through the median line here. And depending on how far it shoots and how much momentum it's got, again, there's a high probability that at some point this median line will get a test from the other side. So let's see how that develops. I'm just wondering whether that's some sort of zigzag forming here. Or even, just bear with me while I'm thinking out loud. Or if that is two parts. So I had two thoughts going through my head there, thinking out loud. If I take this low and I draw a balance point through this first box, I'm wondering, well, look at that. It's kind of reached that already. But I'm wondering if you kind of just assume that this little area here is its own zigzag, this box and this box. So if you put the 50% line in the middle of that, it's almost like a little swap. Or support becomes, resistance becomes support sort of zone. Swap is the wrong terminology. And you might sort of anticipate that that would be a target, perhaps. Somewhere up there, just based on the fact that that seemed to be a little value area there. Price was happy to do business. It resisted originally, shot through it, then acted as support. It's an area of interest. So I'd put a little line through that. Lo and behold, it off if it goes to reach it. So we haven't really come back to test the median line. We have just pretty much shot straight through all of that, and we're just going to have to kind of watch price. We can start mapping it. Just start getting your swings out, practicing finding your higher highs and your higher lows. It's good practice to get into this. Well, that's interesting. There's a W right there. Again, it's one for the harmonic traders, perhaps. I don't really advocate it. Don't know enough about it, if I'm absolutely honest, but you guys will probably be able to tell me whether or not that's a valid pattern or not. But again, just keep watching price. What I'm noticing here is we're in the upper half of this fork. This fork line is still valid, well, it's just about tagged the upper median line parallel of the fork. Look at that's another W right there. Look, it did get a reaction off of this. And let's just draw another one there. So this one would suggest that price should be going down. Came back up to test the initial ignition point, and look at that, we've now just tagged or just about touched the median line from the underside. So you maybe want to start pulling up together some more ideas at this point, because perhaps now that idea is spent. That would be an interesting little area here as well, because we've started to create this higher high, higher low situation. And we've got this mini area in here which is testing that previous leg. Let's see if we managed to take that out. No, we didn't. All right, that's an illusion. It looked like it was lower to me. So the trend is still intact. Just need to take out that previous high for that to continue. Got a bit of a coil developing here, so that's interesting. Bit of a battle. So that'll probably get a test at some point, because that little area seemed to be, a lot of energy was spent in there, fighting that little area out. The bulls won, so they'll probably want to defend that zone, which they did. Twice, 3 times. Again, harmonic patterns are not my speciality, but just wonder whether or not that is something valid, and if it is, then there's an opportunity to buy there. Certainly with the test of this pocket from an interesting clump there, so that's, yeah, a bit of confluence. Don't go looking for confluences to justify a reason to do something, but it's interesting to see it when you're just reading and watching. That's an interesting reaction. Look at that. In here, I can see that kind of wide range bar, that little move there, and that's just taking out this guy, probably. Let's just see. No, it's not. It's a little bit higher than that. Yeah, it's the top of that spike. It's just got zoomed through it. So that's probably where stop losses were. People putting their stop losses above that to short. And then, of course, it gets zoomed, taken out as it goes through it. You start to wonder maybe, and again, just measure it out. It's worth trying to spot those just to sort of see whether or not that is actually valid. It may well not be, but see whether it captures the top. So really, we're still inside this fork. Look, we're still inside the top part of this fork. It's holding it as a channel. So price has kind of captured, this fork has captured the trajectory of the trend. And it's still in the top half. And it shot through actually there. So I wonder now whether we've started to form, as we're still in this trend. This trend is strong. That's an interesting little area actually, but I'm going to use that one just for the sake of simplicity. It's just something's going on here. Okay, now if you take a fork from these 3 pivots, this one here, 1, 2, 3. Just going to remove that balance point for now. Get rid of that. Okay, not really a lot to say here other than the fact that it's already reached the median line from the reaction. It's quite a small fork. We'll see how it plays out inside there. Hey, look at that. So the center line from this fork was acting as support for a number of ways. It was a multi-pivot line, basically. And then it zooms through it and tests it from the underside. So you get, as I say, Andrew says, there's a high probability that you get a reaction at a median line. And then price will either reverse or gap through it. By gap, I mean a literal gap overnight, or a wide range bar, which is what that one would be. And went down towards the low median line parallel. And actually continued through it. So quite a lot of interesting sort of tools and techniques that you can use to live. I was considering a short. I sent it out on the premium channel. It was around about 4:30 yesterday, so it would have been a short from here. And I think a few people took that. We were targeting 12,200, so it was a nice move. and it was a, I don't know, 30, 25, 30 point stop loss, something like that, and targeting 12,200. I can't remember the exact numbers now. It might have been a bit more than that. But it was about 4 to 1 on the move, whatever it was, but I can't recall off the top of my head. And of course this morning, it would have hit that target. So not a lot of drawdown, hit the target, but that would have required you taking a short at around about 7 o'clock in the evening, because that was when I was waiting. I was just watching this for hours, just seeing what it was doing, and didn't take it. But congrats to those who did. So 7 o'clock is not an ideal time to get into a trade, and holding overnight is also not a good idea. So in this particular case, you know, you'd have called tails, flip the coin, and it would have reached out for you, but it's probably not the best idea to get into. Right, so that is the summary from yesterday. That was what I was thinking, and I'll do another one of those on Monday. As far as price action goes for today, there's 2 scenarios that we've got. This builds on the picture that we had from yesterday, and there's quite a few things happening in here. I've got a fork, I've got a multi-pivot line, which is still valid, and a action center reaction line set, and a couple of other things. So let's just delete this rubbish for now, because previous days of data is often not a good idea to play around with. So here's a pitchfork. Let's keep things simple. 3 major pivots that we've got here: A, B, C. Draw a line through that. Draw a fork through that, should I say? And price went up towards the median line, gapped through the median line. Textbook. Came back to test the median line, kind of. Up towards the upper median line parallel. That's probably a better test here, which was the gap lower this morning. So that is suggesting Andrew's rule is still intact, and we could be looking to head up towards the upper median line parallel. So if you're bullish, that's pretty encouraging. So we'll see how that develops and plays out. However, if you are bearish, then this is what you've got. Nope, that's exactly the same thing. This is what you've got. So you've got a trend, very, very clear trend that you can see here. Higher highs, higher lows, higher highs, higher lows. Price starts to lose some of that trajectory, lose some of that momentum. And this was the most recent higher low. So the job of this was to take out that previous high here. I had to do that in order to maintain the swing and to maintain the behavior of the market and the rhythm of the market. If it doesn't do that, then there's a failure and a potential change in behavior. So this little battle that happened on here, again, price is trying to kind of force its way higher. Sellers are stepping in, keeping it below. It then gaps lower, takes out the previous higher low, and we've got a change in behavior. So this little zone is a potential swap zone, as in the trend is swapping from bullish to bearish or other. So one idea could be short from current position or short inside that zone, which would have been about 40 minutes ago, 45 minutes ago, just as I was setting up this room, as often it is the way, but so be it. So perhaps there's going to be another test of that little zone there, a stronger attempt to close the gap, which it would also be disguised as, and that would offer an opportunity to maybe look at getting short. Another way of looking at it is this: if you were a buyer, you'd be looking at that trend thinking, brilliant, I'm going to buy the dip. So in here, you would have got long. You would have put a stop loss underneath that area maybe, or even you wouldn't have used a stop loss at all if you're stupid. No disrespect if you don't use stop losses. But if you don't, you're trapped, because as price gaps below here, you're stuck in a move that you don't like, and you're thinking you're 100 points down, you're looking at your account, you're sort of about to get a margin call, you're getting pretty nervous, getting pretty anxious and agitated. So as price comes back into the zone, what are you going to do? What's the first thing that you're going to do as you start to see your numbers turn from red to black? You're going to get out of that trade. And how do you close a buy trade? You sell. And that's pretty much what happens. Trap buyers, they sell their buys and price continues to tank. So that's kind of the argument for the bears at the moment. Right guys, there we go. So that is what we're going to be talking about, and we'll be back again with another one of these on Monday. Make sure you join us. Hope you have a cracking weekend, and we will see you afterwards. Take care guys.